Hi, I'm Mike Cintolo, Chief Analyst of Cabot Growth Investor and Cabot Top 10 Trader, and I'm here with your weekly review, and I'm recording this late Friday morning on September 2nd. I hope you all have a great long Labor Day weekend. Our offices will be closed on Monday, and we'll be back open for the next market battle on Tuesday. So the market's up a little bit today, but overall it's been another sour week. The indexes are down 2 to 4%, depending what you're looking at. Some of the stocks that were on our watch list kind of gave up the ghost. Not a ton, but one or two here and there on earnings or whatever. And more important to me is a lot of the sort of intermediate term and secondary evidence that had been looking good the last month and a half or 2 months has reversed. I wouldn't say it's super bearish, but the intermediate term trend is no longer up. The number of new lows has expanded. Our aggression index, which is growth versus defense, that's kind of back in the soup, that sort of thing. So again, I wouldn't say it's more descriptive than predictive, but still I would just say it's no longer sort of in our favor, so to speak, okay? So overall, yes, I would be cautious and you call it defensive, whatever you want to say, and definitely respect what's going on with the evidence. Like I said in last week's video, though, I do think a lot of any action you take depends on where you are in your portfolio. If you loaded up during this rally, and if you did, that's okay. It happened. Everyone gets too far over their skis sometimes. Just make sure you're keeping losses small, keeping positions small. Don't let anything get away from you on the downside. In Cabot Growth Investors model portfolio, we only got maybe 45% invested at most, and we did do some selling this week. It's not like we own all good stuff, but now we're about 65% in cash, and our 4 remaining names look okay. So we're trying to practice a little patience. I wouldn't be selling everything wholesale if it looks good here. And bigger picture, and I'll get into this in a second, I do think there's still a good amount of evidence that this is sort of a bottoming process. That doesn't mean you should just whistle past a graveyard at all. But retest, sloppy, I think a lot of good stocks may have already hit their lows, let's put it that way, and a lot of indexes and sectors. That could be wrong. I don't predict these things, but just sort of what I see today and what I've seen over the past few months plays into that. But right now, I do think it's important to make sure, stay flexible and all that, but it is important to have some cash, be selective on the buy side, and just continue to be patient as the big investors try to get some economic clarity and reposition their portfolios looking 6 to 9 months ahead. Okay, let's hop into the charts as usual. I'm using MarketSmith, which is a product of Investors Business Daily, and you can learn more at marketsmith.com. So we'll run through the major indexes. Here's the NASDAQ, and you can just see how, it's one thing for, you kind of had these tests back here. This was the June low, which was really kind of a shakeout below the May low. But anyway, you had, test. Even here was a test, and then you had a nice run. Now, this sort of pullback was sort of normal. But then we got hit on the Fed here and have just kind of skidded lower. And to this point, we're bouncing this morning. But to this point, there really hasn't been any bounce at all. Not that it doesn't mean it's not predictive again. It's just a sign of this really kind of a buyer strike, obviously, is selling pressures. And we dip below this 50-day line too. Okay, so just to come straight down here, not the best action. Now, we come in next week on the video. We're up here, some huge bounce. I'm all for it. Maybe you'd say, well, the intermediate term trend is back up, whatever. But to me right now, you can't say the intermediate term trend is up. It's clearly the longer term trend. We're below longer term moving averages. Clearly that's remained down the entire time, which is really the most reliable indicator. It doesn't mean that's the only thing you want to follow. But so we'll see how it plays out. But at this point, clearly the trend is down. I would also say the NASDAQ, as we run through this, it's a little bit, some of the growth stuff's a little bit weaker than the rest of the market. Again, I'll show you a few charts, but here's the S&P. Everyone talked about this 200-day line rejection. Again, dip below the 50-day line. Ideally, this is a shakeout. We go kiting higher here, but clearly the onus is on the bulls. Russell 2000, same sort of thing. It's kind of at the 50-day line at this point as I record this. Mid caps a bit above. New York Composite, which is another one we look at, which actually has been one of the weaker indexes here. But even so, it's below the 50-day line. So intermediate term trend no longer up. I can't show you the new lows on MarketSmith that I know of, but those have been expanding. They've been in the triple digits for 4 or 5 days in a row, well below where they were in June, but still, an unhealthy situation, that sort of thing. Back to sort of what I was saying at the beginning there about growth. It's kind of hard to see on this chart because it's been such a bad performer. But ARK was actually kind of led the way. It actually bottomed ahead of the indexes in May. Obviously, it's kind of been the leader on the downside, so to speak, which is why I watch it. It's a fund. I don't pay attention to all the hubbub about it. But, it kind of held that low in June. It was one of the first to kind of show a little bit of life, get above the 10-week line. You can see in really in late June ahead of the major indexes. But it also started selling off sharply even ahead of sort of the market here, and it's well below the 50-day line. QQQJ, I like to watch this one again. Kind of looks like the other indexes, but just kind of back in this kind of no man's land. I mean, I'm not trying to understate the selling, but it's just kind of back in this where it was, a month ago in terms of this bottoming area, so on and so forth. And one that I'm not trading off of it, but chip stocks the market can do well, and growth stocks can do well if chip stocks aren't. There have been periods of time that I've been around, certainly since I've been at Cabot, there's been a few times where chip stocks are just okay and growth stocks still do fine. But it's better to have them doing better. And, to see them, again, they kind of almost cracked the 50-day line on the Fed day last Friday, have sunk lower. They're really not that far from a new low here. So that's, again, when you compare this to something like, the financials, which are, not great, but not terrible, or I think I noticed the transports actually have held their 50-day line. So we're seeing growth kind of come unglued a little bit more than before. But overall, I would just say most things are in gear. Most stuff is under pressure. I am going to get to a lot of stocks that are holding up pretty well. But you just want to, just respect what's going on in the market and stay flexible. Bottoming processes can be sloppy. They can be tedious. I can almost guarantee you there's going to be a lot of bad news out there. So you just want to tune that out and just pay attention to the market and try to hang on to some things that are holding up well while also holding a lot of cash on the sideline, okay? In terms of stocks that are holding up, I'm just going to run through a few different, not just sectors, but sort of different things in position in their chart. So biotechs, let me just run through. So XBI is sort of the ETF, and it's an interesting spot here. So obviously this was one we talked about. It bottomed ahead of the market. It was kind of an early, I don't want to say leader, but showed relative strength early. And then it did get going in here, hit the 200-day line and has pulled back. But, kind of when you step back, when I look at that chart, I'm like, it looks, it doesn't look like any sort of abnormal selling. You look at the whatever, go back to the QQQ and it's like whoosh, down 12 or 13% in a hurry, gave back, probably more than half of that advance. I didn't do the math. You look at this, it's not giving back half the advance, and it's kind of hanging around the 50-day line. So we'll see. And there are some stocks that are pulling back, but pretty tight. So this one's a little bit, this is ALNY, ALNY. This was sort of, you can just see, mostly a nothing burger. It looked okay back here and then got hit. But nothing. And then it had a huge drug release. Now, this is one that's, losing a ton of money and stuff. Not my favorite fundamental thing, but just chart-wise, you had this huge gap, a little bit of a rally. A lot of them gapped either on news or on earnings kind of in early August. They ran a little bit. And now this one has pulled back, but, it doesn't look bad. Now, maybe it just keeps pulling back, so I'm not saying you go out and mortgage the house on it, but looks like a pretty good chart. Neurocrine Biosciences, NBIX. I think I mentioned this last week. It's an interesting chart. It's on my watch list. I got to do, you have a big earnings acceleration next year. I would say sales growth isn't as rapid as that, 90% or whatever for next year. But it started to turn around relative to the market here in January. So the RP line's up. You had this big volume breakout in early August again, followed through a little bit. And now it's really been nice and pretty tight in here. It doesn't mean you can't come in tomorrow and it's down 10 points or whatever, but so far, so good on that. Moving on, you have this is just running through some charts. Chipotle, I know you all love $1,600 stocks, but institutions don't care. So you have this big base correction. You have, good earnings estimates this year and next, good current numbers, blah, blah, blah. And then this was actually, I forget, but I want to say this was the biggest weekly volume in a year or something like that. And again, you just have no selling volume here. Now it's holiday week. A lot of people are off their desks, so who knows? But so far, this is kind of what you were kind of hoping to see from the market, which was, not a gap, but you have this big run. And then, it pulls back, but it's kind of, it doesn't look bad. Found some support on, not big, but higher volume yesterday on Thursday. So it looks kind of intact, and we'll see how it goes, okay? Solar still look good. We'll see how it goes. For solar, I think I mentioned this too last week. It's really a news play on the green energy bill. The numbers here are always very up and down, one-time sales and stuff like that. But you did have this long bottoming base, and it's hard to ignore the buying volume. Now, doesn't mean something can't change or they have a share offering. I mean, who knows? But to this point, there's just been a massive amount of accumulation. Even this week, yes, there was some reversals, but even this week, it's shaping up to be a pretty good week. So, there's just a lot of buying in there. I'm not really sure what you do with it, but maybe on the first pullback. But it's certainly a good sign for the group. On the kind of opposite end of the spectrum is Shoals, SHLS. There's a few of these, what I call secondary solars that, they got killed, they bottomed out a little bit, and then they really popped on earnings/green energy bill. And that's fine. But then they've been really nice and tight in here for the last 2 or 3 weeks. Again, no sure things. If the market implodes, all the caveats you want to put on it. But so far, and they're smaller, it's a little thinner, that sort of thing. But I mean, this is just a really nice tight pullback in here. Good earnings estimates, good revenue estimates, so on and so forth. So just one I'm kind of keeping a distant eye on. Just kind of running through a couple of stocks just to be fair here. Like here's GitLab, which I think I mentioned, and the stock is here we go on the weekly chart. So you can see it was kind of bottomed out, kind of had this run, and then it had earnings next week. So you kind of figured, all right, we'll see what happens on earnings. But then this week, before earnings, it just got destroyed. Intermediate term wise, now it's still well above the lows of 30. I mean, it's still up here at $50. So I'm all for some sort of reversal. But so we did see some of this action this week with some of these stocks we were watching decisively break down. Another one I would say did do that is Pure Storage. It had a good earnings report and all this. You can see it opened up, not to get too small ball, but it had kind of this smooth run, pulls back a little bit, and then it kind of breaks down almost on earnings, but now it's snapping back. So we'll see. I'm just mentioning PSTG. I like the story a lot. The numbers are great. Management seems to know what they're doing, and you can see their relative performance line is almost at a new high here. So nothing really to do here, but let's just see if it could actually follow through here on the upside. Moving on, I still like the lithium play. Oops, sorry. Looking at my notes here. Still like the lithium plays. This is Livent. LTHM is sort of there's a couple of them, but this is probably the smaller cap, mid cap play in the group. Kind of straight down, straight up, which isn't my favorite thing, but it's also part of this long, sort of, not long, but multi-month consolidation in here, which itself is kind of a base on a base. I wouldn't say the group is overplayed. It is kind of a commodity group, so we'll see what happens. But again, you have this very sharp run up, and so far the pullback has been normal. Albemarle which is more the institutional play, I would say has been a little sloppier, just boosh, that sort of thing. But big picture, which I'm trying to keep an eye more on the weekly charts these days, just because things are crazy on a day-to-day basis. But it's still kind of perched up near the highs here. Let's see how it closes the week. Maybe it's a support week, and maybe this just turns into a little consolidation before it goes. But this one's still on my watch list. Financials, I'm not a huge financial guy, but I will say higher rates aren't the worst for them. This is LPL Financial, huge earnings estimates. Kind of a bull market stock too. And again, there are a decent amount of stocks that have this. I know the indexes did this and they're back down here sort of thing, but there's a lot of stocks that did this and they're kind of here, where it's like a normal pullback. And the more I see of that, the better. And hopefully the more snapbacks I see, the better if it happens. But anyway, LPLA, it's not going to be a go-go stock, I don't think. But again, you have this nice and tight in here, big earnings estimates. I will mention Goldman Sachs. I keep an eye on this just kind of as more of a sentiment thing. But you did have this sort of, let me look at the weekly chart. I think I've mentioned this. You had this kind of persistent downtrend here, really a pretty nice looking downtrend. And then it, gapped on earnings or really rallied on earnings. And on the daily chart, you have this nice volume cluster and really accelerated higher. Again, having trouble with the 200-day line. But so far it's pulled back, held the 50-day, bouncing here the last couple of days. So, we'll see. I keep an eye on that, like I said, mainly for sentiment. But some of the financials could be opportunities. I mentioned chips and a lot of the things, like here's MPWR, which looked good. And then, this is kind of what you're dealing with. It had this run. You want to see it hold up nice and tight, and it did, and then it didn't, sort of thing. But we're still seeing some that are, I'm not saying they're not pulling back at all, but overall they look okay. This is on semi, ON. This is one of these, I think the silicon carbide thing is a story. And so you have a few weeks up in a row, and just on the weekly chart, these 2 weeks down, not a lot of volume. Who knows how it closes this week, but it looks like support or, mid-range sort of thing. not unraveling, still hanging around the old highs. Maybe this turns into a few weeks, maybe it melts down, but so far so good. And then of course Wolf Speed, which I do like, and it is on my watch list. This does have kind of obvious resistance at 120. I'm not saying anything more than that. You can figure it out. But again, you had this huge volume gap, a little bit of an extension, pulls back, but overall this is, it clearly hasn't given up really any of the earnings gains, never mind the move off the bottom. Still has old overhead, but it seems to have the juice here. Honestly, a couple of weeks in here wouldn't be the worst thing for that. I will just mention, so commodities still look good. These are the natural gas names. I think I mentioned a couple oils last week. This is EQT and Chesapeake are kind of the two of the three that look pretty good to me. And maybe you had this sharp down and then sharp up. It's pretty volatile. 50 to 30, back to 50. Again, maybe you get a little bit. I'll just say it looks pretty good in here. Pulling back from these all-time highs, it's not surprising, but there hasn't been overwhelming volume, and maybe this is a handle or the start of a new little base in here. Who knows? Chesapeake looks kind of similar. Again, sort of tests the old highs, pulls back sharply, pretty sloppy in here, but holding the 25-day line. Doesn't mean it can't pull in further, but the longer these things can hold up near their highs, I think is what I'm trying to say. The longer they can hold up near their highs, the better. And so far, it looks like a pretty normal pullback. Just a few more to run through. WW Grainger, not, building products and stuff, not like the sexiest name. You can see it's not the biggest mover, but you do have this sort of, again, I do see some of these stocks, especially like they've been showing up in top 10. They corrected with the market. Maybe they had 3 legs down here, and then they soared, and now they're pulling back, but so far it's totally normal. We'll see how it goes, but so far so good. Really nice looking chart. And then last but not least, I just want to mention some of these off the bottom names. These aren't really at the top of my list because it's not how I play it. But again, I'm just seeing more. I don't want to emphasize like 1 or 2 stocks, but I'm just seeing more stocks that, this is Uber. It got destroyed, obviously, over a long time. And then it had this gap, and then it started to pull back. But it's not just it's well above its lows. A lot of things are well above their lows, but it's kind of holding this gap, actually kind of holding the low from a couple of weeks ago, trying to hold up here. So let's just see the longer these things can kind of hold that move. Pinterest, again, this isn't really my cup of tea, but you just have sort of multi-month bottoming action. I think it gapped on, I forget, there was some, not an acquisition obviously, but somebody took a stake or whatever. And you can just see it's just holding up pretty well in there. You can kind of see it better on the weekly chart with some of these. Okay, is it in a downtrend? Absolutely, but it's trying to sort of build that bottom that we talk about. Netflix, same sort of thing, destroyed, bottoms out for a couple months, gets ahead of steam going. So far, the pullback is quote unquote only to the 50-day line. Of course, it's buried below the 200-day line, but just seeing more of this almost as not so much I want to go buy it, although the chart looks decent, but just more kind of like, have the sellers already discounted, a lot of this stuff. And last but not least is Toast, which is kind of, there's some new payment stuff. There's a couple new payment stocks I'm watching. They've always, first you had MasterCard and Visa, then you had PayPal and Square or Block or whatever they call it now. And there's usually some more, nichier players that kind of emerge every bull cycle. So Toast was a recent IPO. They specialize in, not grocery stores, restaurants, excuse me. So, got destroyed. It's still got a $10 billion market cap. So who knows, but trying to bottom out, pops on earnings, and then it's sort of, just kind of nice and tight in here. So you're seeing some of these, my point is you're seeing a decent amount of off the bottom names. Yes, you're seeing the Twilios, that look terrible, still, just kiting to new lows, and you have the Zooms, basically at new lows. But you are seeing some of the wheat separate from the chaff. I'm more focused on the ones that are at multi-month highs or hopefully all-time highs. But even among the off the bottom crowd, you are seeing some things that are maybe have discounted the worst, really reacted well to earnings or some sort of accelerated uptrend, and are still pulling back normally despite all the hubbub this last couple of weeks of the Fed and the sharp correction in the market. Okay, so just getting back to the indexes, I'm not trying to. Again, we're 65% in cash, so I don't want to sit here and say, oh, no problem, don't worry about it, stay flexible. I don't want to give the impression that you shouldn't be defensive, cautious, however you want to play it. But at the same time, let's see how it goes. We're still pretty well off the lows here for the NASDAQ, for the major indexes. I still think this could be a bottoming process. The evidence seems to suggest a lot of stocks have hit their lows. We'll see if that's true. So if you have some things that are acting well, I think it's okay to hold on to them. But I would still be very, the bull, at the very least, you can say the bull market hasn't like really kicked into gear, obviously. So if you're buying, you want to keep it small, be very selective, and I think just be patient. And when the thing gets going, there's going to be tons of opportunities out there. Okay, now's not the time to be predicting the next 9 months of declines. That time was 9 months ago. Okay, now you want to be level-headed, even-keeled, and just watching the evidence for when the new leadership gets going. Okay, that's all the time I have for today. As always, thanks for listening. And be sure to come by again next Friday for another Cabot Weekly Review.